Welcome to Funded Trader. One of the first questions I get as I talk to people about trading is, what are you trading? And searching for a candidate can be quite an involved process as you look at chart after chart after chart trying to find the perfect candidate. So the objective of this video right here is to help narrow down that search so that you can get started looking at some great candidates. The first thing we have to start with is determining what our objectives are. Because these candidates, we have to trade something. And determining what our goals are, whether that's a short-term trade, a mid-term trade, or a long-term investment, will definitely determine what type of candidates you're looking at. We also need to understand what our personal time is. Our money and our risk profile will also help us determine what type of candidates we're going to be trading. See, some people are looking to buy stocks and hold on to them for a long time, so they're looking at more fundamental trades, and they also recognize that they have to work within a budget. Some people have hundreds of thousands, if not millions of dollars to buy stocks, and I'm not in that situation, and nor do I want to sit on any candidates. So for me, I define the way that I trade as a short-term momentum option trader. There's times that I'm in a trade for as short as 15 minutes, maybe a day or two. And sometimes I'm into more of a momentum trade, upwards of a month. But I don't hold on to things longer than that, and that's my personal trading style. And because of that, I do a lot of directional trades, buying calls and buying puts, and I also do a lot of credit spreads, bull put spreads and bear call spreads. And I'll teach some of the other strategies as well, but for the type of trading that I'm typically doing, those are my main strategies. And I have a goal in my trading account to produce about a 10% rate of return for the month. Sometimes you're up, sometimes you're down, and it kind of averages out. For some people, that doesn't seem like enough. Other people, it seems unreal. But if you look at it in the long-term perspective, if you were able to produce a 10% rate of return on the month, you annualize that one for the year, and you're looking at a 120% rate of return. And there is no mutual fund or hedge fund manager or anybody or a bank that's going to give you the type of rate of return. And to get that kind of rate of return, you have to earn it. It won't happen on accident, and we have to qualify candidates that can do this because it's a very specific echelon of stocks that fit this criteria. And here's my checklist to qualify a short-term momentum option trade. First of all, I want the stock to trade at least 1 million shares a day. I'll go a little bit lower sometimes, but I've just found that I get disappointed when it comes to the further criteria that I'm looking at. So stocks that trade at least 1 million shares, these are good, mature companies. I'm also looking for stocks that are priced between that $40 to $200 price range. And it becomes a matter of probability. For example, if a stock that's trading at $20 a share, the probability of it moving $2, well, that's a 10% move in a short time frame, and that's not as likely as a $200 stock moving $2, which is only a 1% move. But see, when you get stocks that are priced above $200 a share, they have bigger price moves. And when they have bigger price moves, you're going to have to pay more money. Now, there are some times that I'm trading those more expensive or less expensive stocks. But to get you started, that $40 to $200 price range is a great place to get started. And this should go without saying, but the candidates that I'm trading, it has to be optionable. So let me remind you of some of those option guidelines that I have on my candidates. The open interest on the strike price that I'm considering has to be at least 100 contracts. Put this in your notes, write it down, tattoo this one. Do not mess with open interest on your option strike prices. It needs to be at least 100. Typically on the ones that I'm considering have thousands and several hundred. So make sure you've got that one. Now the spread of less than 50 cents, that's the difference between the bid and the ask. And with option trading, you'll notice that the spreads are a little bit bigger than in stock trading. And 50 cents is my biggest gap that I'm willing to deal with. Oftentimes the candidates that we're looking at will have 10, 15, 25 cent spreads. If it gets up into that 50 range, be cautious. That's just a bigger hole than I like to dig out of. And the proper option that I'm trading in a short-term situation should cost me about $3 to $9. As you know, options trade in contracts, so if that option costs $3, one contract is going to cost me $300. So on a smaller budget, that's what I'm looking for, is a price between $3 to $9. And the next criteria is delta. Delta is one of your Greeks that talks about the anticipated price move in your option relative to a $1 price move in the stock. So if the stock moves $1, I could anticipate my option moving 60 cents if I have a delta of 60. And this helps me determine how quickly my option is going to start moving. I'll negotiate that one a little bit, but 60 to 80 is my sweet spot. And the next criteria that I'm looking for is that the stock's got to move. I'm looking for a stock that can move on average between $1 to $5 in a given day. If it's less than $1, I'm waiting around too long. If it's more than $5, the options get more pricey and the spreads get bigger, and so that's what I'm looking for. I want it to be volatile, but not too volatile. So that's what I'm looking for. Now let me give you some examples and talk about some of these candidates so that you can go in and start watching them as well. Here's 5 of my usual suspects. The first one on your list is Visa. Let me show you some things here. I'm going to pull up a chart right now of Visa. Ticker symbol V. I want to point out that the average daily volume right here is 4.5 million. The average true range over the prior 10 days the stock has moved on average about $1.70 on a given day. So I like the price point. It's trading at $80. It moves about $1.70 a day, trades 4.5 million shares on a given day. I like that. Now the next thing we do to qualify our candidates is to go in and look at an option chain. And here's Visa right here. So the December 2010 stock is trading at $80, so I can come down here and look at, say, the $75 calls. It's 625 by 635, so I have a 10-cent spread there, a delta of 78, and 6,320 contracts of open interest. And I want to point this out right here, is that these candidates, they might change, and obviously the time is going to change, and so we'll rotate new candidates in at different times, but these candidates that I'm sharing with you rarely disappoint, specifically on the options. So let's go in and take a look at another candidate. Let's look at Goldman Sachs. Now Goldman Sachs is priced at $168. It trades 5.3 million shares on a given day, and it moves almost $3 on any given day. So the price point where it's at on the chart may not give us a good entry, but the volume is good, the price is good, and the daily price move is great. So the next step, after I find a candidate that I like the timing, I like the chart pattern, is I need to go in and look at the option chain. So Goldman Sachs trades weekly expirations, which is a relatively new product here. But let's look at our traditional expirations here. Stock is trading at $168. So I come down here and look at the December 160 calls. Well, hey, I could even look at the 165s. 420 by 425, only a 5-cent spread there. A delta of 75 and 8,760 contracts of open interest. That's a very solid option chain right there. Let's take a look at another one. Amazon. Amazon's trading at $175, so it's on the upper end of our price target. It trades on average about 6 million shares on a given day, and the average true range is about $3.77. So this one's going to cost us a little bit more. You can start to see that. The price is a little bit higher, the average range is a bit higher, and the volume is a bit higher. So let's go take a look at our option chain to compare this. Amazon, trading at $175 a share. Come down here and look at the 170s. 650 by 665, a 15-cent spread, a delta of 79, and 6,218 contracts of open interest. Tight spread, good delta, incredible open interest, nice price pattern. Amazon, ticker symbol AMZN. Next one on your list is Baidu. Now, Baidu is a company you may not have heard of. This is the Chinese Google. It's a Chinese search engine. They recently did a 10-for-1 stock split. So prior to this, if you were to multiply this by 10, this would be over $1,000 a share. But since they did the stock split, we've added increased volume. In fact, this stock trades 8.5 million shares a day, priced at $107 a share, and on average it moves $2.76. The other thing you'll notice when we go in and look at the option chain on Baidu is it has some odd strike prices. It actually trades in dollar increments, so I've got to hit the more button to get all the way down to where we're at here. Stock is trading at $107 strike prices here. Let me just scroll that up for you. I can come in here and pick up the December 104s, 450 by 460, only a 10-cent spread, a delta of 76, and 1,200 contracts of open interest. And because it has dollar strike prices, I might even look at the 105s, again fitting all of our criteria. And I'm just keeping this as simple, and I'm just showing the call side, but you'll notice on the opposite side of the screen, the puts also fit all of our criteria as well. And that's why I like Baidu. And the last one on our list is Win. Win is trading at right about $100 a share. It trades on average 2.5 million shares, moves about $2.78 on a given day. Nice price point, good volume, higher average daily price move on an average true range. So the next thing we do is we go back here and look at our option chain. So our December Win options 101, I can come down here and look at our 97s. 445 by 465, 20-cent spread, a delta of 81, 1,200 contracts of open interest. Great open interest. And even if I go out and look at the next month out, looking at the Januaries, they have good open interest, strong deltas. I'm going to pay a little bit more because I'm getting more time, and that's the nature of options trading. So in conclusion, with my usual suspects, this gives me a great place to start because I want to tell you that you can waste a lot of time flipping through charts and going down a bunch of rabbit trails just waiting for the next hot pick. What I would encourage you to do is get to know a handful of companies really well, maybe 25, and focus on those ones. Because if you understand that the options won't disappoint you, all we're looking for is a good entry in the chart pattern. And when you do that, you will get back your time because you can waste a whole bunch of time in these things. And by starting here with these 5 great short-term option trading candidates, you're on your way to getting your own stable of candidates to get in and start trading in the stock market. So follow us further at fundedtrader.com. I look forward to keeping you up to date and trading better. Talk to you then.